Well, the 10-year Treasury yield hovering around the lowest level that we've seen in just about a month, following some commentary that we got from Treasury Secretary Scott Bessent. He spoke with Fox Business yesterday, saying that President Trump is, quote, not calling on the Fed to lower rates. They're not worried, not focused on what the Fed is doing, but rather they are focused on the 10-year Treasury yield. For more on this, I want to bring in Ed Mills. He's the managing director at Raymond James. Ed, it's great to have you back here on Yahoo Finance. So certainly some of that rhetoric and some of the comments that we got from Bessent certainly had and do continue to move the market here this morning. My question to you is, when you take into account what the administration wants to see happen, they want to see lower yields. Is that possible given the policies, especially the tariff policies that are and do seem to be coming out of the administration?
Yeah, Shauna, it's an important question. And I do think that when we look at the Hill and what they want to do on tax cuts, another really important thing that came out of that interview yesterday was a continued insistence by the Treasury Secretary that the Trump tax cuts from 2017 are going to be made permanent. To do that, that adds more than $4 trillion to the debt and deficit over the next 10 years. There is also a desire to go beyond that. No tax on tips, no tax on Social Security, overtime, changes to SALT. Now we're more than $5 trillion. If we see a bill that would add to the debt and deficit by more than $5 trillion, it is going to be a challenge to keep the long end of the curve down. One of the things that I would also look at, Shauna, is if there is something that the Treasury Secretary has some authority over versus the Fed funds rate is Treasury yields. And what we saw over the last couple of years is under the Biden administration, Treasury Secretary Yellen changing the way in which they refunded treasuries that put downward pressure on the 10-year that allowed for us to seem as if inflation was not running as hot. Can they continue that? My bet is they actually have to issue more 10-year treasuries, which will be a difficult part of keeping that lid on the long end of the curve.
And so, Ed, what are the potential offsets if this is seen as a move that would ultimately move the deficit higher?
Brad, when I've been talking to clients at Raymond James, this week in particular, we've seen a very aggressive action by Elon Musk and Doge. If bondholders think that there is going to be less government spending and a material impact on government spending, that they have a higher probability that the kind of fiscal picture of the United States is looking better. We had Donald Trump talking about the establishment of the ERS, the External Revenue Service, through the collection of tariffs. If tariff policy is going to bring in more cash to the United States government, that would be viewed as positive for bondholders. And then finally, if there are parts of the deregulatory agenda, if there is more energy exploration, that should promote economic growth. So what you would hear from the Trump team is those things in combination, Brad, would help bondholders get more optimistic about the future fiscal path of the United States, and therefore bond yields should reflect that.
And I guess my question to you is, when you take a look at Bessent's 3-3-3 plan, and a lot of what he laid out at Fox Business is very similar to what we heard from him over the last several weeks, just in terms of his priorities and what he likes or what he would want to see happen. How much of that is more so sentiment driven versus a material shift that we're going to see on inflation?
It's a to be determined situation. And I would add to that, Shauna, is sentiment is going to be driven by the process in the pace of which President Trump and his administration does things. If we get more of the tariffs, more of the kind of tax cuts early, and we're not getting that energy exploration, we're not seeing a change in energy prices, or we're not seeing the deregulation, sentiment's going to be pretty mixed on this. They are trying to use the bully pulpit of the presidency to get this done. And I think that they have a shot at this. When I've talked to investors at Raymond James, people are cautiously optimistic about the path forward this year with the market. Probably the thing that they are concerned about is the return to volatility that we've already seen. And we didn't have much volatility the last couple of years, but with the policy uncertainty brings that back to the forefront.
Ed, as you evaluate some of the kind of geopolitical uncertainty as well and the tit-for-tat tariff talk that has started to emerge as of this week and, of course, has been prioritized since the campaign trails, how do you look at some of the technological portions as political or even geopolitical pawns as a part of this, thinking about DeepSeek, thinking about TikTok, and how that could potentially continue to get ratcheted into the conversation?
So here at Raymond James, for the last 5 years, Brad, we've been talking about one of the biggest changes in U.S. policy is how we have now viewed our technology as a national security asset. That started first and foremost with semiconductors, semicap equipment that was going into China. It expanded to AI. We also expect it to expand to energy resources. Think about the critical minerals, the rare earth minerals. I'm seeing things in the Biden administration start that Trump is picking up on in his executive order, saying we need to de-risk these supply chains. I've seen things in healthcare, the biopharmaceutical concerns, active pharmaceutical ingredients. We see Trade Representative Peter Navarro talking about healthcare as this next frontier. And so for Donald Trump, if there is something that the United States has that others want, and if our enemies want it in particular, he's going to seek to restrict that and protect the U.S. position on that. And there's been market volatility tied to that. I've had so many conversations at Raymond James with semiconductor analysts. I just know I'm going to expand that group as that export controls expands in Trump 2.0, Brad.
And when you take a look at the news that we're getting out this morning here from D.C., President Trump said to meet with GOP lawmakers on this budget resolution. Time is ticking. Lots of questions about what the next couple of weeks is going to how the next couple of weeks are going to unfold, how likely it is that we are going to get any sort of resolution. You've called it the fact that we're likely on track for some sort of collision course. What does that look like? What's the fallout?
Yeah, so the first collision course that I'm looking for, Shauna, is March 14th. The government needs to be funded by March 14th. The debt limit, we've already started extraordinary measures. That needs to be dealt with. That only can be done on a bipartisan basis because you still need 60 votes in the Senate to get that done. And with the small majority in the House, there's no way, in my mind, House Republicans can coalesce over lifting the debt limit. Some of them just will never vote for that. You have a need to fund wildfires and other disaster relief. But then you have the Trump administration saying, look, what you pass in Congress is not what I am beholden to. That might be a ceiling, not a floor. And you have Elon Musk and the Doge Committee going agency to agency, looking to kind of massively cut budgets. So if you're a congressional Democrat and you're looking at these budget negotiations, why would you get a hard-fought win that can be reversed the next day by Donald Trump? And so I think the threat of a government shutdown is actually pretty high come March 14th. What we can do with the debt limit becomes in doubt. And the longer we're under the debt limit, it might be Scott Bessent's wish, because what we saw in 23 is that the longer we're under the debt limit, the more pressure was on long-term yields. Mm-hmm. But once we lifted that debt limit, we had to issue a bunch of treasuries and yields spiked higher. So it might be short-term benefits to long-term pain, and a huge distrust right now, Shauna, between congressional Democrats in this Trump administration. I'm sure it can go lower, but it's hard to see it much lower than it is right now.
I agree with you there. All right. Ed Mills, great stuff. Thanks so much for taking the time to join us.
Thank you.